Hello, and welcome to myfinancesteacher.org. It has been a crazy week in the stock markets, in gold. The stock market over the last week lost over 15% if you count that bottom the Friday. And looking at the close, the markets are about 13% off the recent highs. Before we continue, let me remind you guys to subscribe to the channel if you haven't and click that bell notification. Thanks a lot. Thank you guys very much for all your comments, suggestions, and opinions. Sometimes, unfortunately, I don't have time to answer each of you guys quickly enough, especially given that yesterday here was a day off and I was away from my computer. Nevertheless, thank you again for all your comments. A lot of you guys wrote that I probably underestimated the coronavirus. A lot of you guys were asking what if a 1987 type of event happens on the markets. And it looks like the viewers that wrote those comments were right. It seems that last week the market started to appreciate the seriousness of the coronavirus. But the problem is when the stock markets lose significantly, 15% in 1 week, a lot of traders that are using leverage get margin calls and they have to sell whatever they have. Whether it is the US dollar here, gold lost a lot. And gold miners, unfortunately, lost a lot as well. So another comment I received was asking for my opinion why we are seeing gold miners dropping so much. And that's basically my answer. At the time of turmoil like this, everything gets sold as margin calls are received. And as things stabilize, I think safer assets are going to benefit from. Another viewer was pointing out that this 200-day moving average didn't hold S&P 500. And the losses were somewhat painful. It's unfortunate if some of you guys entered long positions a little too early. As I mentioned in my previous video, the key point for the stock markets is patience. Whatever the levels, in this case the levels are below the 200-day moving average, I am still expecting some sort of a bounce, possibly over the next week in early March, as the FOMC is trying to push this back, possibly towards that 200-day moving average. And I would expect another leg down to give us a lower low, which usually happens in an intermediate cycle decline. And this actually is no usual intermediate cycle. This, I think, is an event that generally happens every 4 years. I've talked about this in one of my older videos. We're now looking at a weekly chart of S&P 500. And I think you might recognize here that the S&P 500 generally follows this 4-year cycle. There was a significant drop over here in 2019, which was a little bit too early for the 4-year cycle low. It happened less than 3 years after the previous cycle low in 2016. So it looks like now the coronavirus is pushing the stock markets down into this 4-year cycle low just in time in early 2020. After the previous 4-year cycle low took place in early 2016. If you look at the history of the last 20 years, you will see that these 4-year cycle lows come close to either retesting the 2-week moving average or even sometimes dropping below those two. Out of the last 5 4-year cycle lows, the stock market dropped below that 200-week moving average 2 times. In early 2000s after the dot-com bubble burst, and over here in 2008-2009 with the global financial crisis. So it looks like the declining phase of this 4-year cycle is taking place right now, and the stock market is likely to either retest this 200-week moving average at 2,600 on S&P 500 or possibly even dip below that. And I think that'll probably take from a few weeks to a few months to play out. However, just as it often happens in intermediate cycles as well as in the 4-year cycle lows, we are going to see some sort of a bounce first. It happened here in 2015 when the stock markets bounced up by nearly 13% before giving us a lower low. It also happened in 2011 when the stock markets bounced by 11.3% before giving us a lower low. And there were several bounces during this global financial crisis, when one of the largest bounces gave us nearly 15% gains. So personally, I have some positions in nice dividend-paying stocks. Those are relatively safer companies. Although my positions on dividend-paying stocks are losing out, I'm not selling any of the holdings that I have now in the stock markets because I only hold relatively stable companies which have nothing to do with technology. And to be honest, I'm looking forward to try to play the bounce out of this 4-year cycle low. Just look at the history. Wouldn't it be nice to buy this low in 2016 in S&P 500? Look at the gains after this low in 2011. And since the bottom during the global financial crisis, the S&P 500 has already increased 5 times. That's 400% in 10 years. Correct me if I'm wrong. So stay careful and patient at the moment, but over the next several weeks to a few months, I think there will be a really nice buying opportunity in the general stock market. Next, let's have a look at gold, but we'll first have a look at dollar. Looks like the first daily cycle in the ongoing intermediate cycle in the US dollar is about to finish. The ongoing cycle has already been going on for 59 days. Usually these cycles do last for just under 2 months for US dollar. And at the moment the US dollar is close to the support range of the 50-day moving average and 200-day moving average. So over the next few days I would expect a bounce into the second daily cycle in the US dollar. Whether it's going to give us a higher high or not remains to be seen. I personally don't trade currencies, so I'm not very interested in US dollar. I look at it as one of the stepping stones to my gold related analysis. Now looking at gold, given that US dollar is possibly going to bounce over the next couple of weeks, it's clear that we're going into the daily cycle low in gold over the next several days. At the moment, this daily cycle has been going on for 45 days. Usually these cycles last for a couple of months. So I think there is still a few days of pain in gold before we see a bounce into the third short-term daily cycle. However, now it looks like the declining phase of the intermediate cycle has already started. Probably gold has peaked just under 1700 over here in the middle of February. So although there will be a bounce into the third daily cycle in gold, that bounce I think is possibly just going to retest some of the resistance zones. And those resistance zones could be based on this high in early July that's somewhere close to 1610, or this low in late February, which is at about 1625. So over the next short term as well as intermediate term, as we're in the declining phase of this intermediate cycle, unfortunately I think gold and gold miners are likely to slide down. That is going to be painful. Although I was lucky, just fortunate to sell 70% of my gold related assets just before this significant drop, I am still holding that 30% position and I was away from my computer on Friday. So on a smaller position, I am also having painful losses. And once the markets open on Monday, I will have to decide what to do with that 30% position. We might actually see a bounce relatively soon. After all, the Fed has already released a press release saying that they will take appropriate actions to help the economy and help the stock markets. So if the Fed promises to reduce rates or print a lot more money, that might actually help gold temporarily, but this is just a speculation. We'll have to see about that. At the moment, I'm more inclined to selling the rest of my 30% position early next week, Monday, Tuesday, we'll have to see. So that's my opinion and my plan of actions. Let me know, guys, what are you doing with all of this? But in either case, I think it will be helpful to have a lot of cash prepared for both the purchases in the stock market and in gold-related assets as we move down into the intermediate cycle low. And also, when I have time, we'll have a look at the energy. There might be something interesting happening with crude oil as well. So that's all for now. Keep safe, you guys, and I think patience is now the word on both the stock markets and the precious metals markets. Despite the stock market crash, make sure you have a good weekend and good luck in your trades.